Welcome everyone to another Best Practice Partner Spotlight with Redtail. Now this one is all about navigating the choppy waters of DOL using hidden levers in conjunction with Redtail. Now for those of you who don't know, Hidden Levers is a stress testing and risk management platform that's designed to help you, the advisor, and your prospects and clients understand risk in things like portfolios and models and financial instruments. A Hidden Levers toolkit can help you as a user capture risk through risk questionnaires, understanding client risks. It helps you recommend portfolios that are better fitting for a client. It allows you to compare portfolios side by side, basically using a number of macroeconomic outcomes and outputs. What's really cool about Hidden Levers is that advisors have turned to it for all the DOL things that you guys have to worry about right now, because what it does is it helps you capture risk. It helps you showcase why you're making the recommendations that you're making, and it allows you to use their risk monitoring tools to ensure that your clients continue to be properly matched in their portfolios to their risk needs. DOL is all about showing your work, and Hidden Levers is right there to help you show that work. So with that being said, with us today from Hidden Levers, we have David Redtail, and he is going to be walking us through all of the great stuff that you can do with Hidden Levers, especially in regards to all the new fun DOL regulations that you have to deal with. So with all of that being said, David, I'm going to hand the show off to you, my friend.
Whew. All right, thanks, Rick. Appreciate having us here. We're gonna talk about DOL today and hidden levers. Probably something that you guys might have heard of before. This new set of regulations. And the thing about the DOL is it's obviously a huge deal for advisors and reps out there today. But I also want to look at this time to present a little bit about how Hidden Levers Toolkit is more than just about DOL. So not only are we going to help you, navigate those choppy waters of DOL, but we're also going to be able to use this toolkit to help showcase your models, help showcase why you're making the decisions you're making, help you hopefully gain assets, and use this as a compliance tool as well. If you're not familiar with our platform, before we came out of the tech incubator, Mayor Bloomberg's tech incubator in New York City 6 years ago, and we basically are the go-to tool out there for stress testing platforms. So you can see here some of our value propositions that we have. One is obviously to help you satisfy those regulatory demands, obviously DOL. We're also going to help you increase your oversight. Being able to use Hidden Levers, you're able to stress test models, client portfolios across over 95 different outcomes that could potentially happen. What if questions around the macro economy, something that you can't do on any other tool today. And being able to see all of that is a great way to help you understand the risk that you have, the client risk that exists out there, and find potential pitfalls and take care of those things. But we also are a great tool for showcasing. So, helping to a new prospect understand the amount of risk that they're taking on in their portfolio. A lot of clients, the first time they come to you, they might not really understand. They think, oh, I own, these equity positions. That's great. I own Apple. That's a great company. But they might not understand, the risk involved with owning some of those securities. So you can help showcase that risk to them and also help put the spotlight on some of your strategies and positions. What we're really talking about today is also adapting to those new regulations. So what we're going to go through today is a workflow that we've built out at Hidden Levers that's going to help you essentially satisfy this DOL regulatory fiduciary standard, from capturing risk to analyzing the current holdings of a portfolio, being able to also analyze your own portfolio for risk, so something that you're presenting to that client, and then being able to present a DOL-ready proposal for that person that they can sign off on and say, I agree with what I've seen here. And you're very transparent with that client about fees and about the risk involved with what they hold today and what you're making that recommendation of. Our product offering from kind of end to end is, as I kind of noted, we're really focused on DOL today, but we are more than just that. We have essentially sort of three different pieces and elements that we can help you with: asset gathering, interactively assessing risk, and using stress testing as a tool to help clients understand, creating proposals, We also in the middle there in the middle office for the portfolio managers can help you optimize your portfolios. We have a number of portfolio management tools. We're not going to dive as much into those today, but if you are interested in learning more about how we can help optimize your portfolio based on different market uncertainties, that's definitely something we can also do. And then finally, for those compliance officers out there, the great thing sort of around this whole set out is to be able to constantly monitor your book of business for risk. That's a tall task to do on a daily basis, and we've actually built a great batch stress testing tool that's going to allow all of your portfolios to be stress tested every single day. And we're going to highlight for you, red alert, where are there problems, where are there problem areas for your book of business. So without further ado, let's go ahead and let's get into the the product here. And I do appreciate again Redtail giving us a chance here to spotlight our product. And I'm just going to switch over here to my, there we go. So now we're on the Hidden Levers platform. I wanted to highlight the integration first before we move forward. Redtail integration is really super simple to turn on, and it's also a really great integration point. It's a sync integration. Essentially, all you have to do is contact Redtail support, let them know that you want to turn on the Hidden Levers integration. In the background, they're going to essentially turn on a button. Come into Hidden Levers, put in your login, your password, and hit activate. It's going to sync all of your portfolios that are attached to all of your clients and your households and load them right into Hidden Levers. The great thing about the sync is it's also not going to become stale. It's going to update every single night with new information that's pumped through from that Redtail integration. So all those portfolios, the latest values, the latest holdings, they're all going to be there for you every single day. The dashboard here, Hidden Levers, we're going to see essentially portfolios and households over here on the right-hand side, models, and our client section. And this is where we're going to operate today inside of our client section. I'm going to go ahead and add a client. Maybe this is a prospect. Maybe this is a new person that you're meeting for the first time, and you want to essentially be DOL ready to deal with this person. So we're going to save this client. We're going to essentially build out a client workflow. It's a really simple process that we have, step-by-step process for engaging with a new client, starting at risk tolerance, adding in holdings, adding in a recommendation, and essentially getting to results. So let's start here at the risk tolerance. It's the first place. We need to understand what kind of risk does John Finley essentially have. And there's a few ways that we can do that. The first way is we could email out a survey. We can have a 10-question risk survey that you can email out to that client ahead of time. When you do this, it's going to essentially auto-generate an email in Gmail or Outlook, put in the person's email address, shoot that off to them. They can take that ahead of time, and when they walk in, they're already going to have essentially given you answers that can be editable and can be reviewed for how they feel about risk. We can also set this manually. I know a lot of you have strong long-term relationships with your clients. You may have a pretty good understanding of where they fall from a risk standpoint. You can always set this number manually. Our risk tolerance number is essentially a maximum drawdown that we find that the client is comfortable with for their investments, as well as capacity-wise is the most that they can handle to lose in their portfolio to not damage those long-term goals. So it's not any kind of arbitrary number. It's actually a hard number that's essentially what is that downside risk that doesn't damage that person's long-term goals? What is it that they're most comfortable with in real dollar terms? And this goes from 0 all the way up to 50%. So we can set that manually. And the final way we can do that is we can also take our risk tolerance survey. I'm going to go ahead and launch that and show you guys kind of a quick walkthrough of that. It's 10 questions, brief, but also a great starting point for that conversation about risk. The first few questions are essentially just profile questions. What is the main goal for your investments? Your time frame that you're expecting to keep your money invested for. Your current net worth. Your current annual household income. Please select the most complex investment you have owned or would be comfortable owning. This is kind of on a scale of most volatile instruments. A statement of risk. So now we're getting into some more of the risk-based questions. And then we have some sort of choose your own adventure questions. So the chart shows the potential 1-year risk return trade-off of a $100,000 investment. Which would you choose? So sort of getting into that risk reward idea, which we're going to talk about even more as we get deeper into the product. Imagine an individual stock you own lost 30% of its value in 3 days. What would you do? And you make an investment planning to hold it for 5 years. It loses 20% in its first year. How do you react? And then finally, another choose your own adventure. Green line being the investment, the blue line being the S&P 500. Which of these is most preferable to you? So looking at sort of volatility of an investment versus the S&P 500. At the end, we're going to get a score that matches that person. Okay, where do you fall on a risk category, from conservative being at the far end all the way up to aggressive? In this case, this person came back at moderately conservative. They could accept about an 18% market downturn to pursue long-term goals. Now, we've got a couple things we can do here. We can say we're finished, or we can revise those answers. Maybe we have a conversation with that client. We look at a financial planning piece, and we say, you know, this downside risk is probably too great for us. It's a little too much, and maybe we want to adjust that down. We want to use something a little bit less. Or in some cases, you may have a client who's very young. They need to be more aggressive in the market in order to reach some of these lofty financial goals that they have. So we can adjust these through a conversation. But once we're done, we can click we're finished. Down here, we can also describe any investments. So if you do send this out to a prospect ahead of time and they want to enter any new positions, maybe their account hasn't hit Redtail yet, or any of the other software that you use, you can essentially have them build out symbol, dollar amount, and build out a portfolio that you can start to use for stress testing and some of these DOL tools. So let's say we're finished. And now we've got essentially in John's account here, the risk tolerance number comes up. We also log the survey history. So you're always going to have the history of all the surveys that you've ever taken with the client. The next thing we want to do is add in some holdings for him. So when we hit this plus holdings buttons, and that's step 2 of our 4-step process, we're going to be able to choose existing portfolio, or we could create a new portfolio. You can create something on the fly. It's very simple to do in hidden levers. Type in a symbol, add in a quantity that can be dollar value, share quantity, or percentage. We can give it a name. We can also add other things like cash, annuities, fixed income instruments. We have an entire CUSIP data feed here at Hidden Levers, or even options. So lots of different types of securities. I think it's over 35,000 is the library today, and always growing. What's great with the Redtail integration, though, is we can, once we turn that on, we can choose existing portfolio, and we can actually just navigate to that portfolio that's now come in from the Redtail integration. That information will be householded or by portfolio, and we can essentially select John Finley's current holdings from this drop-down here, use this portfolio, and now we've attached his portfolio to his client profile page. The next step is making a recommendation. Again, another really nice piece for the DOL. We can create a new model on the fly. If you've already got your models uploaded, though, we click this Choose Existing Model, and it's actually going to make recommendations to you based on the models that you've uploaded, what model is most appropriate for that client based on risk. So here we see a couple models on the moderately conservative scale. If I flip over to a more conservative, I can see a model that I have that's conservative or something more moderate. We can sort of pick and choose from these different drop downs. Let's go with something moderately conservative that makes sense for that client. We'll go with this example conservative model, and I'm going to assign that. Now, down here we see essentially these 2 red bars that show -33 and -20%. Okay, so what does that mean, right? And we also see that 18% stress test risk number coming through. This is actually results of stress tests that we've done on this portfolio. So right after our portfolio is uploaded, we're going to stress test it across lots of different types of scenarios and different outcomes. And we're going to be able to see the downside risk and potential upside in those different scenarios. So this portfolio, for example, is down about 33% in a financial crisis max drawdown outcome. Maybe a 2000 repeat. We're going to see this portfolio is down about 25%. October 1987 market crash down about 20%. So we can see there's lots of different types of scenarios and lots of different types of outcomes. There's about 95 of them out there, so you can really paint and tell your own story. We like to say, we're basically a PES dispenser for your different PES, your different market assumptions and market forecasts. Let's actually launch into this so we can talk a little bit more about how stress testing actually works. It'd be helpful so you can understand how we get to these numbers. I'm going to launch this S&P down 20% baseline scenario. And what we're going to see there is John Finley's holdings down about 19% in an S&P down 20% scenario. If I hit this plus sign, I'm going to see actually how every single individual holding inside of his portfolio would do in an S&P down 20% scenario. What's great about the system is we're not just taking a look at securities and we're not just calculating standard deviation or anything like that. We're actually looking at a multi-factor correlation between every single security inside of the system and different economic levers. We see these levers here on the left-hand side, things like S&P 500, retail sales, unemployment. And what we're doing is essentially modeling out if we saw an S&P drop of 20%, what would be the reaction to all these different parts of the economy? How would retail sales fare? Oil. We base that off of a 10-year correlation. So we're measuring essence every night. Where's the S&P 500 at? And where are oil prices at? Where's the CPI at? And we look at that relationship over a long-term trend over 10 years. We do the same thing on the security side. We're going to measure the same relationships between Apple, SPY, MEB, and these various economic levers. So if I make a change to this and I say, I only want to see this down 10%, we're going to see a much different reaction to the portfolio. That's because we've basically modified how this scenario works. We're now saying instead of the S&P dropping 20%, we want to know what happens when the S&P drops 11.3%. We can always switch gears to a different scenario outcome, S&P down 10%. We also have upside scenarios like S&P up 10%, S&P 20%. We want risk parity. We don't just want to be a doomsdayer. We want to talk about both good cases and bad cases. And this is very helpful because as a client, you can start to see and understand, okay, how would I do in different types of macroeconomic conditions? And what parts of my portfolio are really pulling their weight in some of these upside cases? What's providing hedges, in some of these downside cases? All right, let's switch gears. Let's go back to that client profile for a second here. And sort of refresh. So when we get to these current holdings, we're going to see that we got that negative 33%. So if I open that up again, essentially these are all those different stress tests that we were just kind of looking at, different outcomes, and the worst case bubbles up to the top and becomes our downside scenario. On the flip side, we can look at that model that we've recommended for this client, and we can see, down about 20% in the worst case. Much less risk in this portfolio, bringing it much more in line with what that client needs. So getting us back to that DOL conversation, we've been able to now match that client with a DOL, with a model that is much more appropriate for them. The final thing we're going to want to do today is we're going to want to generate a proposal. We want to help show this to a client. We want to be transparent and help them understand why we're making this recommendation to them, as well as present to them, essentially all this great information that we can get off the hidden lever system. I'm going to click Generate Proposal, and I've actually got one ready to go for us here. So I'm going to fly over here. Our proposals are completely white label. You can customize them. You can put your branding on them. You can add in static pages about your firm. Tell your story. What's important to your firm? Why are you unique? This is just a little bit of information that we built out if we were an investment advisor. But you can put in pictures. You can add in static pages, totally customized to your firm and your needs. You can add as much as that as you want. What's really great, what's the power of this, is that it's going to do essentially the work that you need to be ready for the DOL. Starting with, we've got the survey in here. So we've got the results of how this client answered those questions. Next, what was their risk profile? Based on those questions, how did we get, what kind of risk profile did we get for that client? And again, this can be signed off by your client. So at the end, they agree that they saw this and they agree to what they're seeing. That risk profile comes out. We're going to get a portfolio allocation side by side. John, here's where you sit today. And here's this conservative model that I think would be a lot better for you. I think it's a better fit based on your needs from a risk standpoint. And we can see that come out here. Stress test calculations side by side. You're currently looking at about 33% potential downside. We've talked about where your number is. it's a little bit lower than that, I think you need to pull some risk off the table. Here's a much more appropriate model for you. And we can see those outcomes down here. So different scenarios, different outcomes, different portfolio reactions to them. And you can paint that story and tell whatever story you want. Actually, when we generate that proposal, there's, as I said, there's about 95 different outcomes that you can choose from. So there's lots of different things that we have inside the system. It's not just what I showed you. It's other things like dysfunctional Europe, debt cliffs, baseline scenarios, China slowdown, oil crashes. We've got all the different types of scenarios that are essentially being talked about on CNBC, talked about on Market Watch, read in the Wall Street Journal, to cover all those topics that your clients may have, and also things that you're going to want to talk to them about that are important to their success. The next page is about risk statistics. So going even deeper than just risk, but also looking at things like performance statistics, modern portfolio statistics, expenses, showcasing for them in green where they're better off. And so very quickly, this client can start to see, hey, I'm definitely better off on this right-hand side, this portfolio over here. It's got a lot less risk, better risk return. And even if they don't understand every single concept here, they do understand that green box does mean they're better off. We're also going to be able to show them upside and downside capture. So showing them essentially hypothetical performance history. The way this works is we take the securities inside of the portfolio, we rebalance them weekly to maintain the same allocation for that entire time frame. That's talked about in disclosures. If you do have return series or composites, you can always lay those in so you can get those true, accurate return series. You can see that side-by-side comparison. What's great, though, is it also shows downside capture. So in the upside, we don't look as great compared to what he's currently holding. But here, we can see all of that volatility that he's been experiencing over the last 5 years. He's taking it on the chin whenever the market turns down. And obviously probably is the reason that he's talking to you today, wants to get a portfolio that's much better fitting for him. Fee analysis. Also want to be transparent about those fees. Really big part of DOL is helping clients understand what they're actually paying for the products that you're recommending to them. Here we're going to highlight for you essentially the expense ratio of every security, where it falls in a range of its mutual fund category or its ETF category, and that allow you to essentially showcase for them those different fees. We can see this Robeco fund, for example, here, a little bit more expensive than some of the others, a little bit expensive in its category. What's great is that the next page, the investment growth page, can help to start to tell that story. And we're actually working on another page that I'm going to show you in just a second here to add to this. But we can see that Robeco fund right here, top line of this model. See the expense ratio there, but we can also see it's been a very strong performer since inception. It's had really good annualized returns, so that may be part of the reason why we own that. You can also always go to a risk profile for any individual security and look at that and showcase things like how is it done in stress tests or how is it done against different benchmarks. So you can help your client understand, and this is printable, this page as well, so you can help them understand those securities that are more expensive, why you want to own those, why they're important. And finally, a compare positions page. Not only can be used for prospects, but also can be used for reallocations, especially as we get ready for that DOL. A lot of clients are going to be reallocated in different ways. So we want to be able to help them understand how they're going to be changing in their positions. And then finally, this acknowledgement page, which again can also be customized. You can customize the language to fit whatever kind of compliance you need, signed off by the client, signed off by the advisor. Great way to file this in their middle folder, and essentially you've got their compliance. It also can be stored on Redtail as well. You can attach it to their portfolio, their profile, excuse me. So, and that's our DOL ready proposal. The last thing I want to show you guys before I don't steal any more of your precious time is our risk monitoring tool that I was talking about, the compliance-based tool that'll help you understand across your entire book of business, how are you doing from a risk standpoint. So let's say we turn on that Redtail integration, pull over all those portfolios, and we're getting that information synced up every single day. What's great about the hidden lever system is we're going to be able to stress test across your entire book of business, all these portfolios. You've also established a risk tolerance for those clients, whether it be manually, maybe you sent out some risk surveys to your clients, maybe you took some with them in shop. And we can also see then how they've done on stress tests. And we're going to highlight for you where you've got some risk. So for example, this client, risk tolerance at 20%, But we can see in a lot of various cases, they're taking on a lot more risk than they should be. This client clearly needs some adjustment based on what they want to do from a risk standpoint. And so this is a place where you can make those changes. As you get ready for that DOL rollout, and as you start to begin to take that to account, this is a great tool to sort of help you understand, okay, what clients do I need to attack first? Which clients are good right now? And constantly monitoring that. As that information comes in every day, you're going to constantly know, has anybody drifted too far from the risk tolerance? And this is a great tool to be able to monitor that. Last thing, please visit us, hiddenlevers.com. It's our website here. We've got a couple awesome things you can do. You can try it free. This green button on the top here. Come in, get a free trial account, 7 days. There's not a lot of technology out there today to let you try it for free. We just ask for a little bit of information about your firm, and you can try out our stress testing and see if it's as great as it sounds. You can also schedule a demo if you want. Hit that red button, and that's going to help you schedule a demo with one of our colleagues. And with that, I think I'll hand it back over to Rick.
David, thank you so much, man. I'm personally a huge fan of all the risk assessment, features out there. Obviously, there are a few, but Hidden Levers, I love the look of what you're doing. I'm a younger cat, so aesthetics are a big deal to me, and I think that what you guys put together is something that is not only good looking from a user standpoint, but also good looking from a prospect or from a client standpoint. If somebody were to sit this in front of me and show me, hey, look at this, let's run this through, that would be really impressive to me as a client. So thank you so much for your time today. I really appreciate it. And again, everybody else who joined in, there is a lot of talk and a lot of doom and gloom about DOL, and I tend to be a lot more positive about it because you all have the technology tools that are available to you to really do what DOL is asking. What DOL is asking is to show your work. That's all it's asking you to do. Most of you are already acting in the best interest of your clients, and for you to be able to show your work is absolutely huge. This is hugely helpful by showing you all the different directions that you could go. Not only with that, but in conjunction with Redtail, with notes and activity management and workflow management, it's all designed for you to show your work. So again, David, thank you for your time today. Everybody else, thank you so much. If you do have any questions for Redtail, please reach out to us, 800-206-5030, and then option 3 for support. But other than that, thank you for your time and have a great day.